Good morning, everybody. It's Thursday, April 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had May corn up $1.75 at 473 3/4. May soybeans were up 4.5 at 1044 3/4, and May Chicago wheat was up 1/4 at 528.5. We had this morning. We had weekly export sales out. Solid for old crop corn, 1,152,900. Upper end of the range was looking for 1.3. So another solid week there for old crop corn. Zero net sales there for new crop. Soybeans, disappointing. Old crop, 277,000. Low end of the range was looking for 200. And we had small net cancellations for new crop, minus 100 there. Wheat, looks like they were rolling from old crop to new crop. Cancellation net cancellations 145,000 for old crop and 371,700 for new crop, which was slightly above the top end of the range for wheat. Meal sales 170,900 for old crop, which is kind of towards the lower end. 5,300 for new crop, and oil sales were 12,400, which was kind of towards the lower end of the range there as well. Good morning, guys. Anything in the way of fresh news here this morning? I guess just more rhetoric out of China. They're saying that there's been no discussion with U.S. leadership, so kind of contradicts some of the things we've been hearing. Outside markets, Dow's down 90, so not really a lot going on there. Outside of that, we're going to have option expiration here tomorrow morning. So with that, let's kick it off. Ben, maybe talk about some of the key areas you're looking at with open interest in the option side, and then we'll kick it around the room.
Yeah, the 470 strike has the most open interest in it, but all pretty big between the 460s, 470s, 480s, pretty fairly distributed in the 60s and 70s. So I just don't think we have a lot to push us beyond 80, below 60. And then you have major moving averages right below 70. So I just don't see a lot that's going to get us out of, too far away from 470. And you're looking at in May, you've got the 100-day 473, the 20-day 470 3/4, 50-day 474.5. So there's a kind of a bird's nest here with moving averages, and you can step back from the chart and say, if it's good, this is the dip you're supposed to buy, and if it's not, it's a failure. And I know that sounds very simpleton, but humility that it could go either way. So the 20-day has been the one that the momentum kind of trades, and we're sitting right above it right now. So
thoughts on the beans? Any numbers there?
I thought beans were very constructive yesterday. They had fought for quite a while and trying to get above the 200-day moving average, which is a 1039, and they had a really nice close above there. So we'll see if there's an appetite for managed money to want to pile into some beans here. I don't think it's going to get away from you, but maybe a grind higher. But when we fool with these moving averages, you can have multiple days back and forth and kind of whipsaw people. So, on the bottom side, the 20-day is rising. It's trying to cross the 50 and the 100-day, but it's probably a little bit of slop until we get through this week.
Very good. Dustin, what's on your mind this morning?
I wish we had a little more direction from outside markets. I feel like, there's, been a setback in corn, in part because we've had some rains in Brazil, and in part because, there may be some switching over to beans on this real rise. Currencies are actually really, I think, still a tailwind. I know we talked about that a lot. We're just going into the early part of the seasonal, April, May, June. So I'm optimistic. It doesn't mean the market's going to go up, but I'm certainly optimistic just with how everything's setting up. And you start looking at some of these major moving averages being crossed in the lead month contracts for beans, like the 200-day. And then coinciding with the fact that the dollar index has fallen below 100 and the real is at, back towards the recent highs. Yeah, it could be a little bit of a friendly outcome, hopefully.
Justin getting a lot of questions. Corn acreage numbers going up and bean acres maybe going to be lower as we go into June. I guess any, top level thoughts there?
Yeah, tough one. I mean, the areas that planted quickly actually start with beans. Like for our farm, for example, we planted 800 acres of beans before an acre of corn. So the methodology for a lot of the areas has changed where, getting beans in early is even seen as more beneficial. So it's not apples to apples with, call it 10 years ago or 15 years ago, where if you plant early, that means more corn. Mm-hmm. Now the price action would say that you would favor more corn in a good planting environment. So I haven't heard a lot, outside of like, the areas that have planted quickly have planted both quickly. So I don't see overwhelming anecdotal evidence that are increasing corn acres. So I don't have, outside of just the price action, right? Outside of just the ratio, would say that if you were going to plant more of one or the other, you would plant more corn. But outside of that, I don't see it. The thing I would just want to get to outside of that is Dustin's point and Ben's. We're hitting all these moving averages. The time of year, if you were going to pick something, I would say that we stop here and rally. Now, also add the seasonal in where, May, June, July, right? Those are your seasonal highs. So if we do get a rally, I would think we have to hold here, and it could be quick. So you're talking about, it's going by fast, right? So the window could be 6 weeks, meaning that, between now and, call it May 15th, June 1st, you might have a high. So you're kind of threading needles here, but I think where you look at where, like we've been talking about where crop insurance, all these things are, it wouldn't surprise me that we bounce and get a run up $4.80 to $5 in new crop corn, and that's all you get. You might not get it at all. Obviously we could just be over. But I think with everything going on here, it makes sense that we're kind of breaking, getting stuff planted, all these things, but we still have a long way to go on this crop. And I think just writing down a record yield for both crops and saying it's done, and all these trade tensions and all these different negotiations that are going on, I personally would favor the upside for the next 2 months.
When you got kind of cheaper, correct me if I'm wrong, but I think you got cheaper volatility too in corn going on right now. So it's giving you an opportunity, to, if you've pre-sold, to protect yourself in various manners and things like that. But this could be a good, time, because invariably, like you said, it could be a quick pop, and it's when guys are at their busiest time, and you're not focused on it. So
yeah, actually, I'm curious, Ben, because the down day we had on, let's see what day, Tuesday, right, Brian? I think vol actually spiked on that down day, which was weird. So like we were doing accumulators, for example, and we were lower and we were getting better accumulators done. So the vol was spiking, probably put buying or something. Maybe it was just thin markets or low vol or low volume that was being traded, but the option vol seemed like it was going up on the break.
Unmute yourself there, Ben. He's got a great thought going.
Man,
too.
That was probably awesome. Oh, geez. Now we're zooming in.
Oh, here we go. Got it.
Carnegie? No, pull over.
Ben's our resident IT guy.
There we go. All right. On days like that, if you have someone who's buying puts because we're breaking and the calls slide up the call slope, you're going to have an interday kind of blip and what those values look like to get better accumulator values. So I guess that's what I would attribute it to. I'm curious as to if they publish what the subscription was nationwide on ECO, because I think that might become a relevant factor as we get into late May and June, if they really try to preemptively pile drive corn.
Yeah, I don't know. I mean, Dustin, wasn't it like going into this year? Let's say last year, it was like 3% or something of the policies were ECO or 95% type coverage, and I would guess this year some multiple, maybe 5x even, closer to 15% or more. Would be my intuition.
Like we naturally, I think, found value in that because the subsidy went up substantially and margins are, low to negative. So naturally, when you get into those situations, like you can't just sit with, nothing on. You need some sort of a fallback plan B, we call it, in case this is, we go into another, trade war and we're back into, high 3s for corn and, high 8s or low 9s for beans. We need some sort of fallback plan, and this is a subsidized way to potentially get it, even though it is a county-based trigger. It's not off your individual. So we found a lot of value on it. Just anecdotally talking to people, I think that it was more popular this year, but I don't know how popular, right? Like I think it's sometimes we're in our own echo chamber. I think that it's very possible it was 15%, like you're saying. I think it should have been, right? We found a lot of value, but it's hard to know until we actually get the numbers next year.
Yeah, I would say it definitely went up, right? It's just hard to tell how much.
Question there.
Yeah,
just hard to know how much, because end of the day, it's still an extra insurance cost, and there may be just an appeal for overall cost cutting too. Even though it's a good deal, that people might not be signing up for it in the droves that we think they would have been.
Right.
Hasn't it historically been prevalent really big out in the West, and it's kind of migrating a little more east? Is that kind of been what you've heard?
Yeah, I think about it like, it's county-based policies like SCO have been very popular in the plains because insurance is just much more expensive out there, right? There's a lot more perils, a lot more weather impacts that they can have, in dryland country, especially. So I think that's where the lobby came from. It is the Northern Plains, is my understanding, for the extra subsidy on ECO, which is it's basically the same. It's the same exact function. It's just a higher, it's a lower deductible, and it doesn't require a special farm bill election. So that the subsidy change from last year this year is 44% to 65%, which doesn't sound like a lot, but it's a lot. I mean, they're paying for 2/3 of that policy, and it was probably a pretty good deal for growers to take it. So I look at it as competitive advantage, money on the table, in my opinion.
Yeah, we talked about that quite a bit there as we were leading up into crop insurance. I know we had a number of deep conversations about it there. We got a couple minutes here. Rye, yesterday, fresh eyes in live cattle, which was nice to see. And then increase in open interest in hogs I saw this morning with yesterday's rally. So I guess what are your thoughts here this morning?
Yeah, we've seen a little bit of cash trade so far on the cattle side of things, a little bit of 213 in Kansas, but still a lot more to go. I think just in general, everybody's pretty optimistic, especially with the price action, just contract high after contract high, just can't keep it down. On a little bit more of a concerning note, some of the rhetoric just between the US and China, and just kind of an underperforming beef market right now, just based on the lower kills. So I think there is obviously quite a bit of bullish sentiment, especially you get into the kind of May 1 to June 11th kind of seasonal time frame, which is typically kind of friendly for futures. But we really haven't seen any cash right now that is going to keep us under pressure. So overall, the news is still pretty good. On the other hand, beef sales on the export report were pretty dismal, just 10,300 metric tons, down 41% from the previous week. And same thing on the pork side of the market, just horrible. We were talking 5,800 metric tons. It was a marketing year low. It's down 72%. So obviously that's going to get into the market here a little bit, especially just with after the rhetoric. between China and the U.S. kind of heating up a little bit, and the fact that we're not able to kind of get either side of the table just yet. So overall, I think we're seeing that hedge pressure in hogs, and just it feels like we're seeing cash markets start to firm up as well. I think the demand sentiment is still positive, but still a lot to be cautious about just with the geopolitics.
All right.
So I just want to add to that. Like,
Yep.
Do we believe that they're not talking? I think
don't.
that's almost impossible.
Yeah.
I mean,
the stakes are so high for both of them that I know there's rhetoric coming out, and like a lot of what you hear is like, some representative from China or US, right, says something, and then they come like, no, that's not true. We're actually talking. I think it's impossible because you're talking about hundreds of billions of dollars with the current tariff rates that would go into effect.
it seems like it's mostly posturing, whatever they
It
would
is
put out.
because I mean, there's business owners that are flying to China, flying to US, talking about these are crippling type numbers. So there's no way that they're not talking, So I think these headlines of, we don't care. Yeah, we don't care either. I think that's BS.
Right.
It's like the first step in negotiation. They're each trying to establish their leverage to begin, and then they'll get something hammered out, right?
Yeah, I mean, I'm not downplaying, the lack of us knowing what's going on, but there's no way. I mean, any reasonable person would be talking on both sides. So I kind of find that as, the market will find out before we do, right? If there was no talking and this was just going to be like, screw you, like I think the stock market would be down another 20%.
I agree.
Personally.
Well, that's the stock market's the voting machine, right? So obviously the market is thinking that's going on, right? I agree with you.
Right.
The market really thought that wasn't happening. We wouldn't be here.
Right.
100%. Yeah.
Very good.
Yep.
We just came into the open here. We got May corn up a penny and a half, 473.5. May soybeans are up 4 at 10.44 1/4, and May Chicago wheat's down a half now at 5.27 3/4. Tomorrow is Friday, so Brian will be back with Fun Fact Friday. We'll see if he can compete with Jack there. He's got big shoes to fill from the previous week, so it should be interesting.
Yeah, Jack did an audition last week, so
it was
Careful.
pretty strong. Yeah. But Brian's older and wiser, so we'll see what he can pull out some tricks here. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so to keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.